Rob. If you pushed it now, I'm going to turn my mic off, but if you start the video, it should go live on YouTube.
All right, let's go and try. Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. And we are live. We are live streaming this edition of TradeFinder. So if you just found us and you're not familiar with TradeFinder, give me a minute and I'll tell you all about what to expect over the next hour or so. If you've been with us before, welcome again. Thanks for the comments on the intro. That is our theme music. You only get a little taste of it when you get our videos, so it's nice to hear a little bit more of it for those of you that have been sitting there for a few minutes. Before we go any further, if you've watched any of our videos, you're familiar with this. We have to do this. It's part of the deal, this disclosure/disclaimer. And if you're seeing it for the first time, please do take a screenshot of it, read it in detail in your leisure. For those important points that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And two, because we have a lot of international viewers and we have a lot of international subscribers as well, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So with that, how does TradeFinder work? Well, we'll go through and we'll do a little brief update on the market. Not a whole lot has changed since the S&P market update. Hopefully you've had a chance to watch that. If not, go take a look at it. It's on our channel. Obviously you found us here if you're watching this live stream. So take a peruse through our posted videos. I think you'll find that our analysis has been pretty spot on over the past year or so. We'll go through some of our recent trade alerts for our alert subscribers. We actually at Elliott Wave options, and you haven't visited the actual website, it's EWOTrader.com, exactly the way it sounds, EWOTrader.com. We do offer an alert service where we send out alerts with entries, any adjustments and exits to our subscribers. And so we'll go through and give you an idea of what that is. As far as TradeFinder, we do look for case study considerations. Then you're on your own to manage them. That's the difference between TradeFinder and our alert service, obviously. So we'll find some trade ideas. We'll go through some of the previous ones that you may not have closed yet if you've been following along with them, give you an update on them. And then we'll look for one tonight. We'll do that live on this broadcast. And then with whatever time's left, I do tend to run on a bit, but at the time, with whatever time's left, we will do some general Q&A. Now, if you are watching this recording, you're not watching the live stream, there will be a timestamp that shows different segments of what we're talking about, like the market, or when we get into Bitcoin or different stocks or markets that we may be reviewing. So just wanted you to be aware that if there's certain things you're interested in and other things that you're not, you can skip towards those if you're watching the recording. So that's how it works. So with that said, let's go ahead and get started. Taking a look at the market itself, see that we are still right here at that 420 level. We've been there since we got close, didn't actually touch the line back on the 16th. And one of the things that we share with our subscribers when we're talking about Elliott Wave patterns and Fibonacci extensions, retracements, etc., normally the lines actually get hit. In other words, those fib percentages or those Elliott Wave targets, normally the line actually gets touched. It's almost uncanny how that happens. And so look back here, we had a doji and thinking, oh, well, maybe we don't quite get there, but we actually did. We touched the 420 line back on the 29th. We tried to break above it on the 7th. Another thing that I share with our subscribers, we do this TradeFinder live, by the way, for our subscribers or for those of you that want to subscribe to TradeFinder. We'll put the link there in the message box. So go ahead and click on it. If you've not registered, if you're finding us tonight for the first time, please click on that link and then you can join us each and every week. We do this live for all of you that are watching. We don't live stream it every time like we are tonight, but we do it live every Tuesday night. Love to have you join us. And then you'll be able to see more of the things that we share with our subscribers. Perhaps you might become an alert subscriber at some point in time. By the way, not a better time than there is right now, and I'll share that with you in a second to join the alert service, but at least join TradeFinder so that you can go through and get our case study ideas each and every week. But one of the things that we talk about with our alert subscribers is you need a second day or a follow-through day when you look to break a major point of support and resistance, major moving average, breaking out of a triangle, a lot of the things that we talk about. And you can see that was a head fake that occurred there on the 7th. There was no follow-through. We moved back down. And so here we sit. So in other words, if you had said, oh, we're breaking above resistance there at 420 back on the 7th of May and gone long, you probably wouldn't be too happy right now. Failed that breakout point, and we're sitting here. We opened to the upside today, closed back down. Look where we closed, 419.67. So we basically closed right on that 420 level. And you can see that the pattern that we have right now is an ascending triangle. Now, I noted over the weekend on the S&P update that everything is consolidating. Bonds are consolidating. The market's consolidating. Gold is at a point of resistance. The VIX is really low, closed up a little bit today. Something is getting ready to happen in the market. I thought it might happen today. It didn't, but too many things are in these consolidation patterns getting ready to break out. One of our primary strategies at Elliott Wave Options is the volatility strategy, where we put on a unique way of doing strangles. And I say it's unique because you're not going to find it if you go out and search on the internet for strangles. You won't see the way we do them. We put the math, gamma and delta primarily in our favor, to where if the stock breaks out, we are mathematically guaranteed to make money as fast as possible. Well, I was mentioning earlier, this is a great time to become a subscriber because something's getting ready to happen in the market. And we have a lot of strangle positions on and getting ready to add a few more. So when the market moves, we don't care which way it goes. If it breaks to the upside, which it still could, I'll share this with you. This is, in my opinion, right now, the last bastion of a potential upward move right there to 426. We've been talking about that. That's a zigzag pattern. It's one of our favorite directional patterns because it's not 5 waves, it's 3. But we have an extended 5 wave. You can see 159%, so pretty doggone close to that 161.8% fib level. And we had a nice extended zigzag within that wave 5. Well, within the C wave of that extended zigzag, here's another zigzag that the 161.8% extension level would hit at 426. So if we're able to break above this, 426 is going to be another important point of resistance. Now, if we break above that, then everything changes. You have to start looking at potentially moving to the upside. But until we break above that level with confirmation, with follow through, I think that you have to be careful and protect yourself to the downside. You have to be cautious of further upside moves from here. And I know the Federal Reserve is still injecting liquidity, et cetera, all those things. But if you've looked at our videos, we've been sharing with you some storm clouds that are building. Live in Florida, so we get those afternoon thunderstorms. We're about to move into that season at this point in time, getting into summertime. But there's just some things to be concerned about. And so what I've been doing is sharing some of those things that create the caution that I think is warranted right now. But as I said, if we break above 426 with confirmation and follow through, then you start looking for the next leg to the upside, which would be 261.8. It's not unheard of. It happens. Doesn't happen that often, though. So that's another reason why I think being cautious right now is the nature of the game for continuing potential bullish moves. But if you put on strangles, as we're doing, you're good if you break to the upside anyway. So we don't care which way well, you know, I always say that. I always say you don't care which way we move. We all know. If you've been trading at all, you know that market moves down faster than it moves up. Well, for the last several years, we haven't had much of a downward move. We had 1 month, March of last year, when the COVID thing came out. Now, other than that, we really haven't had much of a corrective move. But once one occurs, if you're not familiar with it, if you haven't lived through one, if you're recent to the world of trading, when do you see how fast things can go to the downside? Well, when you have a strangle on and it breaks to the downside, that's great, because not only do you get a downward breakout, but you get a spike in volatility too. So you get a double whammy. You get a fast move and you get an increase in value on the put options from the volatility. You can make a lot of money in a very short period of time. So when I say we don't care which way it goes, well, we can make money either way it goes. But if you had a preference, honestly, you'd pick the downside because things move faster downward. That doesn't mean that we haven't been putting on upward trades. So at this point in time, I thought I'd go ahead and share with you one of our recent case study alerts. And this one was pretty quick. This was one BB, which is BlackBerry. You can see we returned 46.5% in 3 days. Well, the entry was Friday. So here's what it looks like. And this is what our alert subscribers get. They get all this detailed information. They get the entry alert. They get a brief reasoning on why the alert is being sent out. They get a chart of exactly what the chart pattern looks like and why we're putting the position on. You can see that BlackBerry had tried to break up on Friday and came back down, but it got a little ways from that 10-day moving average. So it just got overextended and it couldn't hold it and it came back down. But the DMI was supportive of the move continuing to the upside, and this break higher these past 3 days were all on rising volume. And so people always ask, do you include volume in your analysis? Well, I think anyone with whatever technical system they're using should analyze price to volume action. It's been important since the beginning of trading, and in my opinion, will always be important. And it is part of our technical trading system. Elliott Wave, obviously, by our name, is primary, but we have some confirming indicators. DMI is one of them. We also have a very large educational portion of our website. A lot of people comment on the quality of our education. We're biased. We think it's really good, but I think if you took a look at that, you would agree. But one of the sections is Trade Scan, where we go through and detail each one of our confirming indicators. So that's our trading system. We have a group of confirming indicators that we use to complement Elliott Wave. So we don't just simply rely on Elliott Wave. That's not what we do. Elliott Wave is a great indicator, but my belief is that no one single indicator is the holy grail to trading. That's not creating a trading system. That's just relying on one indicator. So we combine the two of them, which just enhances what is already an extremely reliable indicator in Elliott Wave, but we feel like we make it better. But if you're wondering, what indicators do you look at? How does your system work? TradeScan on our website in the educational section gives you a detailed analysis of each one of them, including the DMI. So if you're not familiar with it, you want the ADX moving up. I like to see it break above 20. That's a little break from the norm. If you were to read about the DMI on the internet, you would see you want the ADX breaking above 25. I think that's a little conservative. You can be a touch more aggressive, but you want it above the negative directional indicator, which is the red line, below the positive, which is the green line. You want those two separating, and you want them moving in opposite direction. Basically, you want the DMI to look exactly like it looked on the entry Friday for BB. So it says it was 3 days in the trade, but that's calendar days. So we had Saturday, Sunday, and Monday was a holiday. So today was the first trading day since we sent the alert out to enter the position, and you can see, boom, we turned around, went right back up, just as we thought we would. Well, now we're separated from the 10-day moving average again. And one of my phrases that our subscribers are probably tired of hearing, but I'll continue to say it because I think it's important: no security in any time frame gets very far away from the 10-day moving average. It simply doesn't happen. It's a trading rule. And if you go back and look at any security, put the 10-day moving average on it, watch. When there's separation there, either the stock will reverse back down towards the 10-day moving average, or up if it's a downward move, or it goes sideways and then allows the 10-day moving average to catch up. But regardless, when there's separation between the two, it's going to come back together in one of those two methods. So we're separated again. There's a little bit of resistance. It's not huge, but possibly some resistance there at 12. And I will say in after hours, the stock did continue higher, which means that a lot of our alert subscribers did better than we did. So here is the pricing that we got on the exit. And you can see we were filled at 315. And so a lot of our subscribers that may have entered the exit position after we did probably did even better. But here's all the detail is right here on every single alert. We are as transparent as you can possibly be. I defy anyone to say that there's somebody else out there that does more. Maybe others do exactly as we do, but I don't know what else you can put. And we also have these mark-to-market graphs, which show you where every single position is every single day. So all of them are listed here. So you can see that, well, we traded down a little bit lower after the alert was sent out on Friday, and then boom, to the upside here. And then the closing price was not too far away from where we exited. However, in after hours, it is higher. We'll see if that holds. A lot of things can change in the after hours market. Regardless, you don't complain about 46.5% in basically one trading day. And it was really less than a full trading day from the difference between when we put it on and when we closed it out. So this just gives you an idea of what our trade page looks like, where we list each and every one of our open alerts. And then if they're closed, it shows that they're closed. So this one was a win. It'll say lose if it was a losing trade. Gives you the details. How many contracts did we send out? What was the option, month, and strike? And then the results along with that mark-to-market graph. So there you have a pretty good detailed analysis of how our alert service works. One of the things that I wanted to share with you, and I'm going to go ahead and do that now before I get into our past alerts, is I'm going to blow this up for you so you can see it just a little bit better. Thought you might get some interest out of seeing this. This is our strategies that we've been using year by year since our inception. So you can see the color coordinated, color coding, I meant to say. And then over here, there's a detail of what the colors mean. So the coding analysis, if you will. Now note that back in 2018 and 19, there was a lot of different colors, a lot of different strategies that were put in place. But so far, the majority of our alerts in 2021 have been either long calls or our strangles, which are long strangles. Now, we do focus on long positions. I want to make everybody aware of that may just be seeing us for the first time this evening, is that we do only fixed risk alerts. We don't send anything out that requires margin. You can never lose more than what you put on in the position. So the risk is fixed to whatever the alert is that's sent out. So I think that's important to note. But you can see that there's been a marked difference in what's occurred so far this year versus our previous 3 years. Why? Why is that occurring? Because things have changed. And talking about, after hours, referred to in the past, the Reddit, Robinhood guys, they like to trade after hours, but they don't have the volume to move things the way stocks have moved. You all heard of the GameStop and the AMC and those movements, but there's institutions behind them that are supporting that. And so the institutions have gotten involved with trading after hours. How do I know that? Because you look at the volume and you can see. So if you're not aware of what's happening in after hours trade, there was a recent release done. It's close to 90% of the movement so far this year has all occurred in after hours. In other words, when the market actually opens, there's not a big difference. Now, we may have some intraday volatility back and forth, but from where we open and where we close, not a big movement compared to what happens in after hours. And I've been doing this for a very long time. I've been trading options for 25 years now, and I haven't seen anything like that, which means that even though I've been trading for a long time, there's always new things, and you better be willing and ready to adapt to what's occurring in the market. So there are some rules that have been standing for quite a while that have changed. And then there's some old rules that kind of went away for a while that are back, and you kind of dust them off, and you need to have had some experience being around for a while. I think it's one of the best things that I personally offer is the fact that I've been around a while, and I do have a lot of experience. I've seen an awful lot of things, but that doesn't mean I've seen everything. I just explained to you certain things have changed a bit, and the way the option pricing is moving has changed a lot. Now, one of our favorite strategies to use is a long butterfly, because we place it out of the money, which takes what's normally a sideways strategy and moves it out of the money. It's one of the lowest risk, high return strategies that you can put on as a fixed risk strategy. And you can actually turn that to where time decay, a big enemy in the world of trading long options, becomes your friend. So when you think about that, you take the one thing that's an issue with having primarily long, fully long option trading strategies and turn it into your favor. It's a great strategy, but it doesn't work well when the volatility is high, and volatility has been elevated primarily for quite some time now. So that's one of the reasons that you don't see that there. But with the strangles, if you have volatility, that's what you want. If you have the consolidating patterns, you want them to move. The only thing that can hurt you in one of our strangles is if the stock doesn't move. So you want it to move. Volatility is higher. That gives you an idea of why you're seeing so many of those strangle positions on this year. So anyway, I thought that was an interesting graph. Again, information that we share, but the reasoning is things have changed. The market isn't the same this year as it's been in the past. So if you have strategies that you've been using in the past and maybe you're struggling a little bit right now and wondering why, well, there's a lot of things that are different. So you have to be quick to, and that's where the knowledge part comes in, is knowing what strategies will work when market conditions change. But it's also really important to know that as soon as you feel like you've got something that works, you've got a strategy that works and it's going to work for the market changes. The market is ever changing. So you got to adapt and move with it. So I think that's one of the great things that we offer. But I thought that was kind of cool. And I just share that with you for those of you that are with us all the time or just joining us for the first time, and give you some of that information. So I thought that was pretty neat. All right, so let's go back and review some of our previous case study considerations that we've done in past of our trade finders. Then we'll look for some tonight, and then we'll go through and do that Q&A that I mentioned. So we can go back and look at DBI. So this was the setup, and this was going back to May 4th. So that's what it looked like on May 4th. You can see it was in a wave 3 to the upside. Like the DMI, ADX was moving up between the two directional indicators. So we were expecting this to continue to move to the upside with an eventual target of 23. And you can see isn't really expected to get there towards until August. So just fast forward to where it is now, pretty much where we were. It moved to the upside, but in fairness, I don't think that's enough of an upward movement to where the majority of people, because remember, on the TradeFinder case study considerations, we identify considerations, but then you're on your own to manage them after that, unless you're part of the alert service. So I don't think people would have taken profits there, maybe, but we're leaving this one on here, and we have a doji today. So quite possibly this one makes some sort of a significant move tomorrow. And the wave 4 correction here has been labeled, but it's only 21%. So that's roughly that 23.6% fib level. And Elliott himself didn't place a whole lot of faith, consideration, whichever word you want to use, in the 23.6%. He felt like that was more of a blip and a continued impulse move. He really wanted to see 38.2 as far as a fib corrective level before he felt that, you know, that's indeed a corrective move. And now we're ready for a new impulse move. So for him, yeah, we've pulled back a little bit, but we're still in that same impulse that we were in before. We sent this one out to our subscribers as well. This is love. So this was a strangle position also on the 4th of May. And you can see that it has, I call it morphing, but whatever word, it's turned into a larger triangle than where it was when we started. Now that can be a little frustrating at times because it takes longer to break out than what we originally hoped, but the reward when you have a position that forms a larger triangle is normally when you form a larger triangle, the breakout is also larger. So frustrating when you're patient, you're having to be patient for a while to wait on it, but then that patience is usually well rewarded when the breakout occurs. And you can see we are right in the point of the triangle. And I think when you start talking about the airlines, yeah, we're not really big on fundamentals at Elliott Wave Options, but I think from a fundamental standpoint, if you like that kind of thing, everybody's different. You look at it as, well, you know, airlines have had a double whammy, haven't they? First of all, they had nobody was flying because of COVID. Then they had to block off seats. They cut out a whole bunch of capacity. Now people are starting to fly again, but fuel costs have gone up. So they're starting to get more people flying, but yet their most important cost that they have, fuel, has gone up. So which way is this going to break? I'm just going to be fascinated to see. I don't have a prediction one way or the other. Again, we don't care. We'll still be able to make a profit regardless of the directional move. But we'll see how that plays out. And then this was the following week. Darling, also a strangle. This gives you an idea, and you can see why. I showed you on that color coded graph of different types of strategies that we've been doing. A lot of strangles. And here's another example. See, we had a big movement out here in the mouth of the triangle, which is what you want. You want to see that the stock can move. And then as you move in towards the point, you want the bars to get smaller and smaller, indicating that there's a potential breakout. So this is a good one to give you a little bit of education on, because there's never two false breakouts. We talked about the market. Remember, we talked about the market, how it gave us that head fake on May 7th, but there was no follow through or confirmation. That happens on these triangles a lot too. And I just think that's the way that the market makers, whatever, suck people in. As you can see, we had this big breakout day here that occurred, and then we didn't get any follow through, so we moved back down. Well, then it looked like we're going to break to the downside, and now we're right back to the point. Well, you don't get two false breakouts. You can have a false breakout to the upside. So this is a false breakout, and then we have a big move to the downside, or vice versa. But when you have this, it's like love, Southwest Airlines. What it means is that you're forming a larger triangle. It looked like a triangle and ready to go, and it was a triangle, but now it's forming a larger one. So that just means that this one's getting ready to break, but now we bring the mouth way out here, which gives us more price movement in the mouth of the wedge. And when a triangle breaks out, it breaks out roughly the same price movement as the mouth of the triangle. So however far that is price-wise, that's usually the movement that you're expecting. So you can see when you build a larger triangle, that means then you're looking for a larger price movement. Taking a while, hasn't broken out yet, but when it does, it'll be a larger move than what was originally expected. And we also had Lear, so that's what we looked like here on the 11th of May. This one, an ascending triangle, not the symmetrical triangle. And you can see, look like maybe we're going to head to the downside. Now it's breaking up. So now we have a breakout day above the resistance. So if I went ahead and extended this here, what are we going to look for? Tomorrow we look to see if we get follow through or confirmation, right? So we have a breakout day above resistance today. We'll see if we have follow through from that. In that move to the downside was not a breakout move. It was just, again, a larger triangle. Not to be surprised that this is occurring, that we're having some triangles form larger triangles, because the entire market has been consolidating and the majority of stocks follow the market. So if the market itself is consolidating, it makes sense that stocks are consolidating, especially those that have already been in consolidating patterns. Now here you can see Poly, which used to be PLT for Plantronics, that made a big move to the downside. You could have taken it out, but what we're doing is we're waiting on this move back to the upside, and then we can take one leg off and let the other leg run. So you can take the puts off, which have gained value, and let the calls run to the upside, or are we just coming up here to test this area and then head back lower? If that's true, then we'll take the calls off and let the puts run back to the downside. So those are the things that we'll be looking at doing for our subscribers. And then on the 18th, we had MGA right here. You can see not the largest of triangles, but still a well-formed symmetrical triangle. And that one's breaking out. So there's the move to the upside. That's confirmed breakout to the upside. So it looks like that one's going to continue. So the point of the triangle was at 96. We're trading at 102. So we've had a 6-point move to the upside. We won at least 10%. So we'd like to see a few more dollars out of that one before you might consider taking that off. And then we also added KBE, which was the banking sector, because we have so many stocks. Even the following week, as you'll see in a moment, we still had banking stocks that were in consolidating patterns. There's so many of them, just do the index. So here's the S&P ETF for the banking sector. You can clearly see that ascending triangle, we're still there, haven't broken out yet. So what you do is you just redraw the lines. So we still have the higher lows and we still have the same resistance point. The financials are getting ready to move. And here's what I was talking about as far as the following week. We had the XLF. So this is that was banking. This is financials. This is what's consolidating. So quite often we don't have two different ETFs from the same, roughly same sector, and they're not exactly the same, but pretty similar sectors. But when those are the best patterns, that's what you look for. Now, the XLF tried to break out today. So we'll look to see, do we get a follow-through day tomorrow? If the financials break out to the upside, well, that goes back and lends credence to the fact that maybe we're going to break up to that 426 level on the SPY. Financials tend to lead the market. The other thing that's leading, and I'm going to share that with you as well, talked about this in the market update over the weekend, the small caps, the micro caps. BB would be considered one of those, and you saw what happened with that today. So here's a couple more, and then we'll look for one this evening. There was SeaWorld. We can see that as SEAS. I just thought that was interesting because I live in Florida, right? So we have SeaWorld in Orlando. And then you look, trying to break out to the upside. SeaWorld going to move? And we'll see. It looks like a pretty good move. Now, did it get follow through? No. See, we had a breakout day here on the 27th. Didn't follow through. That question gets asked, and our subscribers ask that a lot as well. For a breakout, does it have to be consecutive days? Do you want for the confirmation or follow through day to be on consecutive days? Yes, is the answer. So this doesn't count as a breakout because it didn't get confirmed the next day. Well, we're trying again today. So here we go. Tomorrow, are we going to get follow through or confirmation? Maybe wondering what the futures are doing. They are flat as they can be right now. So we're not getting any indication with the futures as far as what's going to happen tomorrow, but we're going to be looking at these case studies to see if we get follow through. And then last but not least, we had Walgreens, and you can see this pattern here as well. So we're sitting pretty comfortably in these past case study considerations, just waiting on the market to move. Now that one did break out to the downside. Interestingly here, it didn't get confirmed, but that was a big downward move for Walgreens. And now we're consolidating that move. So we want to put the 10-day moving average on there. So let's just walk that one back a couple more days. And you can see, boom, look where we were. There was the breakout. There's the close. There's the 10-day moving average. What did I say? No security in any time frame, gets very far away from the 10-day moving average. So you wonder, why is it consolidating? That's why. Had to go back up and touch the 10-day moving average, which it did. And then it moved back just a bit lower, even though it closed higher on the day. It looks like it was a bit of a more downside move, kind of forming another little smallish, not great, but a smallish triangle here as well. And we'll see how that plays out over the next couple of days as well. So these positions all look really good for when the market decides to make its breakout move. Some of them are kind of trying to break now. As I said, we'll see if they get their follow through days tomorrow. So let's go ahead and see if we can find one line before we get to Bitcoin. Maybe you can see that over there. I will. I'm sure you're going to ask. Let's look for a case study consideration. And then when we get to the general Q&A, we'll look at Bitcoin. You want to talk about an interesting chart. If you didn't watch the SPY update, it only has gotten better since the market update. So that is coming. We will look at that. But let's see if we can find another case study consideration tonight with the live stream. So as you can see here, this is the most I've seen right down here. EWO momentum scan. Now, if you're wondering what this program is, a lot of people ask because the charts are really clear. It's called Profitsource. You can find out more information about it at profitsource.com. Over here, you can see these blocks that say Elliott Wave options here. Well, only subscribers to Elliott Wave options that have Profitsource get these. Profitsource is still a great program. It still has all this other stuff. You can still put in your own system. You can still create all kinds of strategies, and you can back test them going back as far as data exists to see if your system holds up over time. All those cool features are still there. But for Elliott Wave options, the people that created this program were kind enough to add these in for our Elliott Wave options subscribers. So you can see some of the indicators that we look at, the ADX. I like the Wave 3 for our zigzag patterns. So they put those in there. These EWO scans are my personal scans that I've developed over my years of trading. So our subscribers can see the exact same thing that I look at on a daily basis. Now note that the bullish impulse stocks, that's our primary search for directional trades. It has 0 results. But we also created a momentum scan. And where that came from is a lot of our subscribers were asking, and we do the TradeFinder live on Tuesday nights, but on Thursday nights, we have a live webinar as well for our alert subscribers only. So they're the only ones that can attend that. They ask questions, and they started asking questions. This is before I really knew how big the phenomenon was with the Reddit guys and Robinhood and telling everybody, please be careful. Those are going to blow up. And a lot of them did. I'm sure you've seen all the Twitter things, and now they're kind of getting a little bit of a resurgence here. But I was getting asked about stocks that I'd never heard of that were low dollars. And rather than just trying to stick it to the man by finding stocks that have heavy short interest and trying to create this short covering rally, which is what all that was about. And you probably know by now, as I mentioned earlier, there were institutions behind it. The Reddit subscribers are not large enough or powerful enough to force big institutions that are short to cover. So we had other institutions that were behind it, and that's what made it become successful, at least for a short period of time. So my point here is like, well, if we're interested in that, if we're interested in lower dollar stocks, then let's do it with a technical system that's more intense than just heavy short interest. And so we created this momentum scan. Now you can see there's 14 results. That's the most I've seen since we created this. So that's telling you, when I was talking about going in with the, give me a second, I'll bring it back up, the program. So what we did was we created this momentum scan so that we could find really good quality, lower dollar stocks that had patterns, and we've had a lot of them. Now we had a period of time where they didn't do so well, and then they all came roaring back. So overall, we've had pretty good success with that. And so now, if the micro caps are going to lead, you can see some of these lower dollar stocks like BB that just had its big move today coming back. So we'll see how that plays out. So let me bring that program back up for you, and then we'll go through and see if we can find any. We'll take a look at it. Not normally something that we'd spend a lot of time on. Be more interested in looking at the Strangles. Again, I know we have some that you're already following. So let's see. We'll take a look at it and see what it looks like. But let's look at some. Maybe we can find a directional one, and if the micro caps break out, I'm going to go ahead and show you that search first. That ETF. If you didn't see it, it's IWC. And so here you can see it's the iShares Micro Cap ETF. So here we can see this, the Micro Cap ETF. Look what's happening. So it's also, and I shared this over the weekend in the SPY update, at resistance. And this one is more of a, not so much a triangle, but a trading range, where it's been bouncing between 140 and 150. It's trying to break out. So here we are again. You get the theme for tonight? Tomorrow is a really important day in the market. So our subscribers on Thursday night will be talking about this, I'm sure, because a lot of them are viewing this as well, to see if we got follow through on a lot of these charts that we're looking at. If the IWC does break out, again, that's an interesting segment. Doesn't portray the market as much as the financial sector does as far as where things are going to go. Money always rotates. Even if the market itself is going down, money goes somewhere, because when you have retirement programs, IRAs, 401ks, etc., that money comes in, and by law, a high percentage of that money has to be put to work. So even if the market's moving to the downside and a fund manager has all this money coming in, they can't just let it sit there in cash. They're not allowed to. They can have some, but some of it has to go to work. So you rotate. So where's the money going? So if the Dow is going down, if the big cap stocks are going down, where's it going? Maybe into the micro caps. If high tech isn't working, big tech, maybe this is where things are going to go, regardless of what the S&P does. But as you can see, again, today's just one day. So we have to see what happens tomorrow. If so, then that momentum scan all of a sudden is going to be, you'll see that color code change there with positions that we'll be putting on. But that also, the other side of that, I'll show you, there's a lot of long call options here, because really you don't want to put spreads on $10 stocks. You take all of the potential movement out. You can't get a good enough delta to do that. So now you get an idea of why the color coding looks different, not just from the strangle, but from the long call side as well. So let's see what happens tomorrow. If it breaks up, then we're probably running up to try 160 again. There's nothing else in the way. So follow through tomorrow, brings the IWC back up here. I should draw this line right there to the top at 160. And then taking a look at this momentum scan becomes pretty interesting. So let's go ahead. Let's deviate from the plan, if you will, which was to look for another strangle. We've got several of them. So let's see what else we can find. Now, the interesting thing here is, even though I've been around for 25 years trading options, trading the single dollar stocks was never my thing. I was looking for stocks that traded above $20 a share was usually my limit, and I would set my searches up for the higher dollar stocks, and I just didn't pay any attention. They didn't do back then what they do now. You would get a few every now and then that would take off and run, but not enough to where it merited even paying attention to them. They just didn't happen enough. Well, things are changing now. So again, you have to change with the times, and you better be able to do it rather quickly. So let's look at Sandstorm Gold, SAND. I don't have any idea about this, but I know that gold is at a bit of resistance. We had a long position. Let me just go ahead and show it to you. We had a long position on gold, which we took off because it was nearing a point of resistance. So we have this gap here. With that gap filled, and then we've been consolidating. So is that the end of the upward move, or are we just consolidating and moving higher? I feel like gold maybe wants to take a rest and move back to the downside, but we'll see. So I don't know what this is, Sandstorm Gold, but we're just looking at the charts anyway. It's in a wave 3, and you can see that's a pretty decent looking DMI. Now, my preference is for this ADX to come down below 20, and it did. So it broke below 20 here in May, and that would have been on the 14th. And then we've been curling back to the upside. So that looks pretty good. I'm guessing this is a gold miner. Not sure, but the miners could still do well with the increased price of gold itself. Even if gold starts to correct a bit, it could still work out okay from the long side for the miners. We'll wait and see how that plays out. That's an interesting one. It's a pretty decent looking pattern. Our subscribers know that I really like it when stocks move in a 45-degree angle. I don't like the vertical stuff. That's the reason that we took the BB off, is too vertical of a move. What goes straight up quite often comes straight back down. So I don't like that. I like these 45-degree angle moves, because when the stock moves in an impulse in 45 degrees, the corrective moves tend to be less severe. You're always going to have corrections. That's the market. Impulses and corrections. Nothing goes in a straight line, whether it's to the upside or the downside. You have upwards and downward moves regardless of what direction the trend is. But when you have this 45-degree angle, the corrective moves tend to be less severe. So that looks really good for me, in my opinion, to move up and hit that target price right around 9.5. We're trading at 860 now. So that would be a consideration to see, and they actually could balance out the fact that we feel that gold may pull back. Now here's I assume this is a financial, Golub Capital. I don't know. Again, most of these, I'm not really aware of who they are, what they do. In some ways, I think that's a good thing, because you don't have any preconceived notions. You're just following the chart pattern. Find the best chart patterns. Look at that setup. Wow, let's see what the options look like here. You can actually get option information here on Profitsource as well. That's a pretty good looking move right there. What I'm looking at here, if you're curious, is all this consolidation. The stock has been hovering around this $15 level going back to the beginning of the year, and not a whole lot different than that going back into last year. And now we're breaking the new highs. Look at that. We broke to a new high today, and the DMI looks like, hey, we want to go higher. Now, one concern would be the ADX hasn't broken above 20 yet. Now, that is a rule. Want the ADX to break above 20. But I'm just curious to see what the options look like here. So GBDC. Take a look and see. GBDC. there are some. And the spreads aren't ridiculously wide. Well, they're kind of wide. So what I'm looking at here is, if you're curious, I'll bring this microphone magnifying glass, he's trying to say, here to where you can see what I'm looking at. And you can see the 1250 strike call for August there is 260 by 410. It's kind of wide, a higher delta, which, by the way, is one of the things that we've been moving towards. We're changing our strategy a little bit on these lower dollar stocks. You don't want to do spreads because they don't move enough, but our 30 delta, which is, by the way, the fastest acceleration of delta, if you didn't know that, with the micro caps, the small dollar stocks, and there's too much room for manipulation from the market makers. So we're looking for a little bit higher delta on those now, which we did on BB, which worked out really well. So anyway, the $15 strike, the 79 delta, 90 cents by $1.40. So not bad. Interesting there, the options, but we can't send this one out right now because that ADX has to break above 20. That's a rule. But I really like the way this pattern is setting up. So we'll keep an eye on that. So what I do in a situation like this, and I'm old school, I have pen and paper. A lot of you probably are really good at creating spreadsheets, etc. I get made fun of a lot because I still have yellow tablets. I got a whole stack of them on the side of my desk, where I keep notes, and my watch list is still written in hand, written by hand each day. But that's going to go on the watch list. If we continue to get this kind of separation here between these two directional indicators, and that ADX does move above 20, that one's going to be put on with an in the money option. But for now, you got to follow the rules, and the rules say no. But boy, I really like the looks of that pattern at this point in time. Let's see, there's a few. Oh, yeah, well, too late for that one, right? You can see this vertical move here. That's what I don't like. So now you can see this was a little too vertical for me, but we could have been okay with that. But now we've gone parabolic, right? So a little bit more than a 45-degree angle, not so bad, but now we've gone completely vertical. Elliott Wave pattern is still showing a wave 3, and we're likely to go up to hit 575 or so on here. I don't like that vertical move. It may go vertically all the way up there. Some of them have, and I'm okay with that, because more often than not, when it goes straight up like that, it turns around and comes straight back down. So we'll let that one go, even though that looks good. But this is an example of the kind of stuff that you can identify on the momentum scan. Let's try this one, ASAI. It's another one. And there's another fairly vertical move. So you see that we can still find lower dollar stocks that have great impulse moves without dealing with just worrying about what's the short interest, etc. This one hasn't been trading very long to have heavy short interest. It's only been around since the beginning of March, and it's moving to the upside. Still has a bit of room in the DMI, so it came back down. You can see it got a little bit ahead of itself right here. I bet if we look at the 10-day moving average, you'll see some separation there. Let's walk back. Yeah, see how we got separated from the 10-day moving average? Well, here's exactly what I'm talking about. Now watch what happens. Now that one came back down and touched the 10-day moving average rather than going sideways. And so that gave the DMI a chance to reset itself, and it has done that. And here's the two directional indicators. Tell our subscribers a lot that it looks like they're going to cross, but they don't. They come together and kiss. Like right there, it looks like, oh, they're about to cross. The sellers are going to take control, but they come together and they kiss and they go back in the same direction that they were. Boom, back to the upside. And so that one looks pretty interesting to continue higher as well. Not quite as vertical as this BBD was. That's just too vertical. See what the options look like here. Money is, let's see what the volume looks like. We don't even have enough to have a 200-day moving average on here yet. So you can see the volume 200. I look at the 200-day moving average of volume. It usually puts a red line on there to tell you where that is. Well, it hasn't been trading for 200 days, so we don't even know what that would be. So you just kind of got to guess what's the average volume. You could change that to 50 days or whatever to give us some sort of a reading. But that one looks kind of interesting. I mean, this would be a big step away from our norm if we were to do something like that, but it could be fun. Let's see what the options look like. Oh, not much. This is what I was afraid of. There's not a whole lot of choices there. The 1715, let me put my magnifying glass back up here again for you. I know that's too small to see, but you can see in the September options, spreads are, I mean, that 15 isn't too bad, 220 by 320. I know that's wide. Normally that would be like, what are you talking about? That's $1 on a $3 option. Yeah, normally that would be wide. But when you're dealing with stocks that move like this, what happens is in after hours trading, the spreads widen back up because of stuff like what's going on with BB. It's moved up higher after hours. So what the market makers do is they widen the spreads when the market closes. So when you're looking at after hours quotes, you don't always get a true viewpoint of what the spreads look like during market hours. So when there's trading and there's actual activity, the spreads can come together. The market makers do that to protect themselves, because if you're trading and they can't find somebody to take the other side of the trade, they have to take it. And so they might be on the other side of the trade, so they widen the spread at night. So if something happens overnight, which is becoming more and more common, as I mentioned earlier, then they don't have as much risk of some sort of a big spike when the market opens the next day. So my point is, even though that dollar spread looks wide now, that could actually compress and come in during the trading day tomorrow. And perhaps that September 15 strike, it might only have a 40 or 50 cent spread tomorrow. And when you have a newer stock that seems to be still in its momentum run, that could still work. So when we take a look at that, you look there to the upside, and yeah, that looks pretty interesting. I'm going to go ahead and write that one down as a consideration for tonight. So, we keep track of every one of them. You can go back. We've had subscribers that have come because they went back and looked at past trade finders, and they looked at the case study considerations that we found in the past, and they thought, wow, your record's pretty good, and that's why they joined. So you can go back and look yourself if you're newer. So ASAI, trading at 17, looking to go to 19. That could be a decent move in a stock like that. So let's see if we can find one more, and then I'll take some questions here with what time we have left. PBR, traded that stock in the past. See, now that's starting to get a little vertical there, and that's the stuff that starts to make me nervous. It's getting away from the 10-day moving average, and as I said, it could go, maybe it goes straight vertically all the way to the wave 5 target. That could happen, but there's too many of them that look like that, and they turn around and they come back down. We've already shown you 2 of them that got separated from their 10-day moving average and came back to the 10-day moving average. Doesn't it make sense to wait and get a better entry if it comes back to the 10-day moving average? So if we miss one here or there because it continues and gets really too far away from the 10-day moving average, gets really extended, we miss one here or there, but then we don't get caught with these vertical corrective moves. It makes more sense. Certainly with what's going on with oil, etc., that one's really interesting. See with the DMI, boy, that looks really good. Doesn't that look good? Look where that ADX came from. And now it's breaking up above 25. So even the purists with the DMI that like an ADX breaking above 25 would be happy there. We've got good separation between the two directions, but it looks super good. I just hate that separation with the 10-day moving average. Now there you can see the red line on the 200-day moving average. So that gives you an idea of what I look at. Good volume there above that 200-day moving average. So they're not fooling around with this. It's had a really good consolidation period here. And then, so we've broken up. I wonder if that's a zigzag. Let's see if it qualifies. It's a zigzag. Let me show you what I'm talking about here. We have this cool zigzag tool. So we'll be able to find out. So that bar there was the start of the impulse. That's where it ended. Yeah. It is. So the 100% extension would be right at 11.15. And if it goes to which the DMI looks like it, we'll take it to its extended level. That's what we do when we get the targeted price is here, 11.15 from the zigzag pattern. Once it gets there, we look to our confirming indicators, which the DMI is a primary one, to see what is the probability of it continuing up to the next level. And with the DMI that looks like that, would say the probability of it going up to the 161.8% level is high. It's also at the top of this box here. It's called the tap box. Within Elliott Wave, it's the time and price projection. So basically, looks like it's going to 12. So that's another 1.5 points. Now, does it pull back tomorrow? You can wait and see. If you get a little bit of a lower entry tomorrow, that could be really interesting. I'm going to go ahead and make a note of that one too. PBR.A, so that'll be A shares. And that looks good. And we'll just go one more. Peabody Energy, BTU. Well, missed that one by a day, didn't we? Look at that. That has to be a zigzag there. Well, holy cow. Trading at 740 could easily go up to, oh, look at that. How about that? Did you see what I just did? I had the Elliott Wave pattern off. There's the zigzag. And the target is 100% at 1060, and you turn the Elliott Wave on, that's dead smack in the middle of the tab box. So now you have two primary Elliott Wave patterns giving you the same price target, which is 1050. And write that one down too. See how far we are. This one might even be the best one. It's a tiny bit above the 10-day moving average, but that looks really good. All right, so we have three of them to look at. So we'll see. If the microcaps extend, we'll be okay. If they don't, if they pull back, we'll see how this is actually a good test. So if you're watching the live stream tonight, come look at us next week. So if you're watching the live stream and you haven't signed up, remember, you can click the link in the comment box there and join us, and let's see what these do. It's kind of this is interesting for me to see if the market does correct. Do the microcaps continue up? Do they correct? If the IWC corrects to some of these individuals, there's some questions to be answered. It's all learning experiences. And so we'll go through all this because we'll review all this next week. So please join us if you're new, even if you're not. All right, so let's take a few questions here with the time we have left. Jeff just asked, is there any significance to the double bottom at the 405 level? So let's go back to the SPY. And see what so what he's talking about is right here, these two lows here, and those are two pivot point lows. There's no doubt about it. I don't know that that would be a classic definition of a double bottom, but there's two pivot points, and the reason is because they're just such big moves the other way. So you have a pivot point low there and a pivot point low there. So I would say you have a double pivot point. Does that count as a double bottom? I guess it's semantics, right? But if you're not familiar with a pivot point, it takes 3 bars to create one. So if you have a pivot point high, you have your daily bar here, and this is the high of the day. Then the next day has a higher high, and then the third day comes back with a lower high. That middle point is the pivot point. So it's the exact opposite on a low. So you have a bar here, there's your low of the day. The next day is a lower low. And then the following day then would be a higher low. And that middle point there with the lower low becomes the pivot point. A lot of people draw trend lines on pivot points. So no doubt that's support from those two pivot points. Is there significance there? Always significance with pivot points. So the reason that I'm not mentioning that or talking about that as much is it's kind of included in this ascending triangle pattern that we have right here, because that's kind of where the bottom of the mouth of the triangle is. So it kind of plays in. And as you can see over here on top of those two, there's a big point of support there as well. So if we break to the downside, will these two hold? I don't know that that's enough to hold. I really feel like we come down to 400 if the market breaks to the downside without going up to 426. We'll see. Let's take a look at the futures now, and still flat, nothing. Futures are telling us absolutely nothing. So that was good question, Jeff, really good. Baron asked thoughts on IWO, and there was a text question as well. So there's let's see, IWO. AMC. Yeah, I'm sure the whole world wants to look at AMC. I'm sure you know it was up after hours because they got some more financing. I don't get that. I don't understand that stock at all. It was trading at $2 not that long ago, and they keep diluting the shares by getting more and more financing. That you're lowering the value by doing that. Yeah, I know people are starting to go back to the movies, but are they going to start going back more than they did before? I don't see that. I mean, congratulations to AMC for finally getting their act together and taking advantage of this to bring in some extra income so that maybe they can survive. They may own the whole movie theater industry by the time they're done. Who knows? But the IWO has a really nice ascending triangle there as well, as you can see. So something's getting ready to happen with that. That ties into the market. We're at a wave 4. Really point of resistance there. You can see 39%. That's the 38.2% level. But wave 4s can go all the way up to 61.8. So that doesn't mean that's the end of it. And just if you're curious, if you are new to this program, when you see that dotted line down there, that's telling you if the wave 5 starts, that's your target where the 5 is in this tap box. It's not telling you the wave 5 has started and that's where we're going. It's telling you if we start down in the wave 5, that's where the target price is. So it's a forecasted price. That's why it's called the time and price projection. But we could break up all the way up to a 61.8% level here. So in other words, the wave 4 could be up in here somewhere, and that wave 5 target will change. Based on where the wave 4 goes, that target will change and it moves. So it's dynamic with the market, which we know the market is dynamic. So that was a good question. All right, let's go ahead and look at AMC. I know everybody wants to, but after hours, let's see I didn't look at it in the last couple of hours. So it peaked all the way up at 39. So you can see that vertical move is not done. You can see why I've stayed away from it. I don't like that vertical stuff. Well, it's gone even more vertical. And after hours, see that separation from where it is with the 10-day moving average. To me, it looks like a great short. But the way the market makers have set these pricing up on AMC and GameStop, you can't make any money. They're going to just suck so much volatility out of it that unless you spend enough money to go with deep in the money puts, and they're going to make you pay a fortune for them with what they're doing with the option pricing. Unless you're willing to put up some seriously big money, you can't make any money on the downward move. So if there's any sort of extrinsic value, you can't take advantage of that. So right now, 39. So it came up we closed at 32. So it's up there is where it would be if it opens there tomorrow. So I don't want to go anywhere near it, but that's where it's going to open if it stays where it is right now. It could change, a long time between now and when the market opens. But so you raise $35 million, you dilute your shares even more, and the price goes up. Makes no sense to me. So these defy everything that's going on in traditional trading. So personally, I stay away from them. If you've made money on them, congratulations. I look at this more of, wow, there is a pretty good triangle here. And that triangle made a massive breakout. And that's where you could have, made some money from a more traditional standpoint. But chasing this move, I can't do it. Like I said, if you're making money off of it and you're doing well, I applaud you. I want everybody to make money. I don't begrudge anyone. What I don't like is when things are being really broadcast and sucking retail traders in that are newer into the world of trading, and it's easy to the moon and all this stuff. It doesn't work that way. It's not that easy. And so I just don't like the unrealistic expectations. Trading is hard. It's difficult. And if there was some easy peasy way of making money, there's super smart people that have been in the markets for decades that would have figured it out already. It's not as easy as, oh, let's just find stocks with heavy short interest and stick it to the man. No, it doesn't work that way. They've caught a few institutions that are playing off of that, and then they get in and get out, and then the retail traders are left holding the bag. That's the way it works every single time. So anyway, but certainly interesting to see that. James asks, what about the zigzag from the B point to the wave 5, then to the low? Talking about the market? Are you talking about the market, James? I'm not sure what security that is because we've covered so many of them. Maybe you're talking about the market itself. B point to the wave 5 in that zigzag that I drew. I assume that's what you're talking about, is this zigzag here. The B point to the top of the wave 5 and then the low. Well, that zigzag hasn't hit its target yet. Remember, we talked about it, touching the lines is what usually happens. It hasn't actually touched it. You can look at that wave 5 and say, well, it got close. Or B to the top of the wave 5. Are you talking about a new zigzag? Maybe here, like a complex C. Maybe that's what you're talking about. So yeah, that would make sense with a 50%. If we have a if we move to, see, I wouldn't look at that yet until we hit 426. But if we hit 426, that's when, okay, where do we go from here? That's when you start looking at the next pattern. So I think you're just a little bit ahead of the game. But yeah, I mean, that could be something that we look at. If we get to 426 and we look like we're going to move higher from there, well, where do we go before we get to 261.8, which is way up there at 452? Well, potentially we could look at 442 first. So I think that's what I think I figured out what you're saying. So yeah, that's very possible. I just think that you have to get to 426 first, and then that becomes a point of interest. So Pankaj wants Boeing. Let's take a look at Boeing. Making a nice move to the upside. It's benefiting from the fact that some of these airlines are actually ordering planes again. Look at the 10-day moving average, not too separated. But here's what you gotta, if you can get above 260, Pankaj, then you've got something. You're very highly likely going to 300. That's a pretty good looking DMI. So I would say that I don't know if we need to rest here a bit at 260, if we need to go sideways and rest a little bit there and consolidate. But the DMI is setting up like it's going to break that 260 level. If it does, it's going to 300. But I think you need to see a break of 260 first. So if you're long, I don't see any reason to get out. If you're looking for an entry, I think you just have to be a bit more patient and see what happens. How to join TradeFinder, should be a link in the comments section. You can just click on the link, or you can go to the front page of our website at EWOtrader.com. But I believe the support guys have put a link in the comments section here with your question and answering, to where you can just click on the link and it takes you straight there. But if the link isn't there, if you can't find it, you can go to EWOtrader.com and it's on the front page. TradeFinder, it's free. You just sign up and subscribe. Oh, Bitcoin. Yeah, when I reloaded it, thanks for reminding me, Bill. Boy, you guys would have been really mad if you'd have waited this long and I didn't do it, wouldn't you? I can type. One more time. So here's what I wanted to show you with Bitcoin, and after hours is trading. So this is the end of day chart. So the live is pretty much right there, unless something happened since we started. And this is what I wanted to share with you. So this triangle is formed even larger than where it was over the weekend. It's continuing to consolidate here. And this is what we shared on TradeFinder a couple weeks ago, was if we broke this 100 level on the extension to the downside, we were coming to a 161.8. Well, it happened in one day. So it was like, doom, to the downside there. So that's the end of an extended level. So this is kind of where the market is. right? So this is very similar to what's going on in the market, just the opposite direction, where the market went to 161.8% extension on that C wave of the zigzag, and it's been consolidating. And so Bitcoin went down here. So that was the easy read. And where it goes from here now, Bitcoin needs to tell us where's the new impulse going to be. So if you could put a strangle on it, that would be the thing to do. Bitcoin is forming this symmetrical triangle at the bottom of a pretty vertical move to the downside. I really like when you have a fairly, this is when I do like vertical moves. When you have a vertical move with a symmetrical triangle, whether it's a vertical move to the upside with a symmetrical triangle or a vertical move to the downside with a symmetrical triangle, that's my favorite moves there as far as a breakout. Bitcoin is going to break out. Now, I don't know which direction it's going to go. It's done everything from an Elliott Wave standpoint. So people have always said, does Elliott Wave work on Bitcoin? You tell me. There's a zigzag that went to its 161.8% extension. The wave 5 extended 100%. It's supposed to come back to the previous 4, and it did. So you came back to the previous 4, and you went to the 161.8% extension. Two major Elliott Wave patterns that did exactly to a T what they're supposed to do, and now it's consolidating, which is very common as well. So, I mean, Bitcoin could not be any more in tune with Elliott Wave right now. So where does Elliott Wave say it's going? It says you have to be patient and wait for the breakout. Let it give us a new impulse move and let us know which direction that's going to be. Is it going to be an impulse to the upside or the downside? It could go either way. So right now, you're just guessing. If you're following Elliott Wave, you're following the technicals of the system, it tells you be cautious and wait, let the next impulse move come to you, show you where it's going to be, and then you can figure out a pattern from there, what the pattern is going to be. You can see the 10-day moving average has caught up now from that vertical move. So all I can tell you is that Bitcoin is going to make a pretty substantial move in the not too distant future. I can't tell you which direction though. It could be up or down. We're really over time, but Paycom, we'll be talking about that one Thursday night as well. And you can see it bounced up and it started back down. This is kind of what we thought was going to happen. Haven't labeled a wave 4 yet, so we're still in a wave 3 to the downside. So looks like we're turning to head back lower, but we'll see. This is probably going to go with the market. This is one of our stocks that we've identified for our subscribers as one that will do really well to the downside if the market corrects. So if the market corrects, this wave 5 target here down at 260, that will be hit in a very short period of time, because you can see this move to the upside here. Remember I talked about what goes straight up, quite often comes straight back down. There's nothing in the way here until you get down to that support area. So that wave 5 target is very likely going to happen. If the market moves back to the upside though, then we would need to see Paycom get above 340. So that's going to be the main thing. James asked a further question on the SPY, which zigzag takes precedent. The one that's already happened, the big one. The bigger the zigzag, the more precedence it has. So the first zigzag that hit its 161.8% target, that was the main one. That's an extended level. Then we have a complex C wave that gives us the target at 426. If that gets hit, then we move down to the next zigzag, which is that one you were talking about, which could take us up a bit higher. So the larger patterns always take precedent. Emilio wants to look at GE, and then I apologize, but we're going to have to wrap things up because we're over time and they're going to shut us off, and I don't want that to happen to you. But movement to the upside on GE, really nice breakout. It's consolidated the breakout, and so if you're wondering, oh man, is that the end of the move? Well, not necessarily, because it got overextended. So let's walk this back. You know, GE is a great American company. Both my parents used to work for GE, so kind of near and dear to my heart here. A little sentimental viewpoint here. Thanks for asking about it. But you can see where GE moved to the upside here. Pretty big move for GE, but that's some decent separation. I hate that gap. That's another thing we talk to our subscribers about. Gaps get filled. We just don't know when. So, but they do get filled. That's something that'll happen at some point in time, but doesn't necessarily mean it happens right away. So now we're going sideways and we're allowing that 10-day moving average to catch up. That's the more bullish of the two scenarios. As long as it holds here above 14, let that 10-day moving average catch up. So it's like gathering energy again because it was exhausted, right? I made this big move. It's like the stock just ran a marathon and you're exhausted. You can't run anymore. You have to wait, get your breath back, and then you can take off and run some more. That's exactly what happens with stocks. And so now it's consolidating. It's getting its breath back. We look at the DMI, and the ADX is not to 20 yet. It's above 15. There's good separation here. Not concerned about the positive directional indicator coming down because the stock is consolidating. What you want to see is that ADX continue to move up. So if we consolidate here for another day or two, the ADX moves up, breaks above 20, still between the two directional indicators. That's telling us that GE could go higher from here. But right now, we ran right into the previous high, right, that occurred back in March. So boom, we hit our head there. We got overextended. There's no way, there was not enough energy left to continue to a new high because it was overextended from the 10-day moving average. Best scenario for GE, continue to consolidate above 14, let the DMI set up, and then maybe we have something more to the upside. But that's what has to happen. So you need to get a follow through of a break above that closing high that we had here at 14. So call it 1450. You want to see GE break above 1450 with some confirmation from the DMI and a follow through day. And then who knows where GE could go from there. But that's a good one to finish on. I want to thank everybody for your attention. We're very respectful of time. We know time is precious for every single human being. Thank you for spending a bit of it with us this evening. Hopefully, if you saw this on the live stream, we'll see you next Tuesday night in the regular